Most traders panic the exact moment price moves against them, almost like the candlestick itself has betrayed their entire bloodline. Meanwhile, this one candle setup prints even when you're wrong. And I'm not kidding. Even if the trade goes against us, this system allows us to capitalize even when we're wrong about direction, which gives us the ability to make automatic income and fuel our account growth. In this video today, I'm going to break down exactly how this one candle hedge setup works and how you can apply it to your trading after watching this video. So all we're going to need for this system is going to be the daily candle, the fib retracement with these levels here, and of course, you're going to need a brain. When it comes to these mechanical systems, we must have the ability to think in probabilities and understand our system has a mathematical edge against the markets that allows us to extract capital on a regular basis. Now that we have an understanding of what we're going to need for this system, that's going to bring us to step one, which is going to be to wait for the daily close at 5 p.m. EST. And after the daily close at 5 p.m. EST, we simply want to measure the daily candle from high to low. And for example here, you can see this doji candle is measured from high to low, with the 1 level indicating the high of the candle and the 0.5 level indicating the 50% of the candle and the 0 level which indicates the low of this entire candle. And of course, on the lower time frame, specifically the 1 hour view, this is what we're going to be seeing, which if you've seen my previous backtesting videos, when we're testing these one candle systems, we're using the lower time frames to observe price so we can see that clean view when we're backtesting. And of course, I have an indicator set up to indicate the previous day close, the current day open, and the current day close. And as you can see, the previous day's range data is within this frame here. And as we wait for the current day's range to play out, this frame here will be filled with data on this given time frame. So after you have measured the previous day's candle from high to low, that is when you want to get your orders ready for the system, which in this case, we're going to be placing a buy and sell order at the 50% of the daily range. Now with this system, we're not waiting for a break of the high or the low. As soon as the daily candle closes, we can go ahead and get our positions ready at the 50% with both a buy and a sell order. And this is where the hedge comes to play, as when we're placing both a buy and sell order, no matter what direction price goes in, one of our trades is taking a guaranteed loss while we're giving price upside to run in the other direction. And as you can see in this example here, price went ahead and tapped the 50%, entering both a buy and a sell, and continued in the direction of buys, stopping this position out here and filling this position here for a profit of 3R. And of course, just like this model presents, we're going to want the stop loss at both the high and low of the daily range. As the data has shown, a take profit of 3.2 is the most profitable RR. And of course, as you guys know, I don't test a system live unless I have over 1,000 trades for that given system. And of course, that's going to apply for this hedge system you guys are seeing today. And of course, that's going to apply to all these setups within my one candle playbook, which if you guys already haven't grabbed, link is in the description below. It's filled with profitable one candle systems that has over thousands of trades back tested, and that has allowed me to scale my account to over 6 figures. But now that we have an understanding of how this system works and all the steps involved, we're going to go ahead and head to the charts. Now that we have made our way to the charts, we're going to outline the previous day's candle from high to low. This is what has performed best throughout my backtesting. So today we're going to be running through GBP JPY. And of course, just as I outlined, we're going to be testing this candle on screen. So we'll scale down to the 1 hour time frame just so we can see price from the cleanest view possible when we're backtesting. We'll let this range finish out, and I'll go ahead and adjust these fib levels here from high to low. And now that we have these fib levels outlined, as you can see, as soon as price open, we hit the 50%. So that's going to be a buy position as well as another sell position. And of course, just as I outlined in the rules for the system, as soon as price trades in the 50%, we're going to enter both a buy and a sell. We don't have to wait for price to break the high or the low. We can simply show up to the charts at the daily candle close, place our orders, and simply enjoy the rest of the day. And this is why I like trading these one candle setups specifically at the daily close. So this way, whenever the daily candle closes, I just place my orders and I'm done for the day, which personally, I haven't seen anything like this on YouTube. And that is why I'm super happy to share this with you guys. Hopefully you gain some value and a little bit more freedom in your life, especially when it comes to your chart time. But anyway, now that we're entered in both the buy and sell position, we're simply going to let price play out and reveal itself. So we're stopped out of the buy there. So we'll go ahead and delete this position here and document a -1 RR. And now that we are officially still in this sell, we'll make sure we're targeting 3.2R. And keep in mind, on MetaTrader, you would have already had your take profits all situated, but for the sake of backtesting, we're just gonna do it this way, just to keep the charts clean, and just so you guys have the best understanding of this hedging strategy. So now we want to let this daily range close out, and hopefully we'll hit take profit or stop loss. Okay, we have reached the next daily range, and we are still in this sell position floating. We have not hit stop loss or take profit, which is no worries, we can still hold the trade. So what we'll do is continue to measure our daily highs and lows, and we'll observe this next range's price action. And as you can see on open there, we actually did hit the 50%, so that's going to be another buy and sell order upon the daily close, a stop loss at the high for the sells. And now we will simply observe price and let it reveal itself to us as always. Okay, so we instantly stop out the buy position, so we'll go ahead and delete this right there and document another -1 RR on our journal. And as of right now, we are currently still in this sell position as well as this position here. So we'll go ahead and drag this to a 3.2R take profit, and we'll let the range finish out. Okay, so this one did not hit 3.2R quite yet, so we're still in this position there. And let's see, did we hold? Okay, so price does reverse and we do take out this position here. So we'll go ahead and delete this. And as far as the current position we're in, we are still holding the high. And just to confirm, we'll zoom in just so you guys can see that high is still held. So we are still in this position there. And before we get too carried away, let's not forget to document on our journal another -1 RR. And now we want to make sure we're targeting 3.2, which we are, and we'll let this range finish out. Perfect, so we have this next daily range outline. So we want to make sure we continue following the ranges from high to low, and we'll shrink this a little bit there. So we hit the 50% there, so we're going to enter another buy stop loss at the low and a sell with stop loss at the high. Okay, so we go ahead and trade the candles low, so that's going to be a loss for this buy here. We'll exit this position there, and simultaneously we hit the previous day's sell orders take profit for a profit of 3.2R. So we're going to delete that and include another -1 RR as well as a plus 3.2 RR. So we'll head back to the charts and we'll make sure we're targeting 3.2 for this position, and we'll let this range finish out. Wonderful. So we have our next day's range. We don't hit stop loss or take profit for this sell position yet. So we'll continue following the ranges, and we are totally fine holding that trade and floating profit. There's no worries at all. And we'll make sure our highs and lows are outlined correctly. Wonderful. And we'll continue testing price and see what the data reveals to us in this back testing session. But again, now that the daily range is closed, you're going to get your orders ready at the 50%. For the sake of back testing in this video, I'll wait for price to trade here, then I'll take the positions. Okay, so we hit the 50% there. Again, that's going to be a buy, stop loss at the low, and a sell with the stop loss at the high of that given daily range. Okay, so we stop out the buy. We'll go ahead and delete that for a -1 RR, and we'll make sure we are targeting 3.2 for this position, and we'll let the range finish out. Okay, the next daily range is closed. We are currently in two positions now, this sell order here and this sell order here. We are still in floating profit, which is no worries at all. We'll continue testing the ranges. We'll make these a little smaller just to clear up the charts. And we'll drag the Fibonacci to the low and the high of the previous day's range. And we'll observe price action in this current day range and see if there's any trade scenarios. Okay, we don't hit the 50%. So this was a no trade scenario. And let's see, we do hit this trade's take profit for 3.2. So we'll delete this and add another plus 3.2 RR. And you guys are probably seeing all these -1 Rs, and it can be a little frightening. But when we have a take profit of 3.2 R, we don't really necessarily need a high win rate. In fact, through backtesting this system, including the hedge losses, it has about a 40% win rate at 3.2 R, which is a high enough win rate to consistently maintain profitability at this RR target. So we'll just keep following the daily ranges. We'll make sure we adjust this fib from high to low. And as soon as price opens, let's see, do we get a test of the 50%? We do not quite yet. There it is. So again, we're going to place both a buy and a sell with the stop loss at the high for the sell. Okay, so we go ahead and stop out the buy. Let's delete that. That is totally expected when we are hedging. Adding another -1 RR to the board, and we'll continue backtesting price. But first, let's make sure this is 3.2 R. We'll make sure our stop loss is right on the high, and we'll continue observing price. Okay, so do we hit this, take profit? We do, so we clear this for 3.2 R. We'll delete that and add another plus 3.2 RR. We'll come back to our charts and let the range finish out. And as you can see here, we go ahead and smack take profit at another plus 3.2 R. So we'll go ahead and document that on our journal. So in total with our winners, we have about 12.6 R. And factoring in our losses, we have 1, 2, 3, 4, 5, 6. So we have a total about 4 winners and 6 losers, which is about a 4 for 10 total, which is about 40%. But of course, in different sample sizes, you might have different results. For example, you could have a flawless session versus on the other hand, you might just completely get wrecked by probability. But that is the whole point, especially when you're trading a purely mathematical system. You have to make sure your risk management is dialed so you can actually let your account compound with the true probability of the system without blowing your account. But anyway, I would say that was a pretty successful backtesting session. If you guys enjoyed the video, make sure to like, comment, and subscribe. And if you haven't already, grab my free 1 candle playbook down below. But anyway, I'll see you guys in the next one.